and welcome to Let's Talk Business. Nifty snapped 3 days of gains, whereas the Sensex snapped 11 days of advance to end in the red. The Nifty Auto hit a lifetime high and Nifty PSU Bank scaled to a fresh 12-year high in intraday trade. On the other hand, realty, media and metal sectors fell. Alex Matthew with the wrap of all the market action.
Well, it was a pretty lackluster day of trade in a shortened trading week. You had the Nifty 50 trade in a very short range, which is less than 80 points, and we ended at very close to the low point of the day, down about 0.33%. Of course, we came within touching distance of that 20,200 mark. The broader markets also lost ground, and in an otherwise lackluster session, you had one particular section of the market that saw quite a bit of strength, and that was the PSU banking pack. As a whole, this pack gained close to 5% at one point. We ended at lower than that, of course, with gains of over 3%. Metal, realty and media stocks underperformed on the other end of the spectrum. The key event to watch this week, of course, is the outcome of the FOMC meeting. The Federal Reserve widely expected to keep interest rates unchanged, despite the fact that inflation has not yet come within the comfort zone of the Federal Reserve. Among the key movers in trade today, you had Power Grid Corporation of India, which was the top performer. Then you had the likes of Titan and Mahindra, both of which hit all-time highs. The entire auto pack, in fact, continued to gain ground. They were the top performer on Friday as well. HDFC Life and BPCL were the other top gainers. Among the losers, you have Hindalco, which was the worst performer, and indeed the metal pack as a whole underperformed. HDFC Bank was the biggest contributor on the losing side of the picture, and then you had the likes of Adani Ports, Bharti Airtel and Adani Enterprises. Now, among the key stocks, you had Indian Overseas Bank from the PSU banking pack, which gained 20% at one point. Of course, it ended with gains of over 15%. But most importantly, it has actually become the third largest public sector bank by market capitalization, overtaking Punjab National Bank in trade today, and that was quite significant on account of a couple of very large deals. Power Grid Corporation, I mentioned, that was the top gainer on the Nifty 50, and that also is a counter that saw a large trade today. Dhanlaxmi Bank saw quite an interesting development. Its independent director resigned from the board and quoted what he said was belligerent attitude of the MD and Chief Executive Officer as the reason for that decision. And then Bharat Electronics is another stock that I was tracking. It was up over 3% in trade on account of an order of 3,000 crore rupees. But like I said, all eyes on the Fed meeting outcome, and that's later in the week.
All right, the spotlight on the Fed meeting outcome. Now, in the midst of economic uncertainty in China, India is proving to be a better long-term story, says Jefferies' Christopher Wood. In an exclusive conversation with BQ Prime's Neeraj Shah, the market guru says that India may emerge as the favorite destination for foreign institutional investors. Let's listen in.
Basically, it's now widely understood, I believe, that India is a better long-term structural story than China. That's really always been my view, but that's virtually everybody's view. So, and obviously that's in large part, there's lots of reasons for it, but one obviously key reason is demographics. However, China is a very big part of the emerging market Asian benchmarks. Now, given all the political issues between the US and China, given the precedent of Russia stock market being suddenly essentially cancelled and basically removed from the MSCI index, many global emerging market funds or managers are at the back of their mind, there's a small but not zero risk that this could happen with China. Because this incident happened with Russia with very little notice. So if you were a global emerging market fund, let's say you had 10% of your fund in Russian equities, which some did actually, then suddenly you're forced to write these stocks down to zero, although they're still trading in Russia, and Russia's kicked out of the benchmark. So there is for people worried about this, and also don't think China's as attractive a story. They don't like the size of China in the benchmark. There's a growing interest in what has been called global emerging market ex-China mandates. And so in many ways, a good approach would be to do that mandate, and then for people who want to invest in China, you have a separate mandate. So I'm not saying this is starting to happen, but this is the discussion. Meanwhile, global money has stopped investing in China. Money not dedicated emerging market money, global money which doesn't need to invest in China because China is only a small part of the global index. So that global money does have the potential to come to India.
Dollar index seems to be strengthening. Oil prices seem to be higher. Does that bother you when it comes to global risk assets and India as well?
Well, dollar index will keep strengthening so long as we're in the higher for longer mode. But my working assumption is that the moment we see some real employment market weakness, which in my view should be coming, then in my view the Fed will then be put in a situation where it has to decide between its two mandates, that is employment and inflation, assuming inflation is still above 2% year on year. And my base case when presented with that challenge or that dilemma, my base case until proven wrong is the Fed will focus on the employment mandate, not the inflation mandate. That will then send a signal to world markets that the Fed is not going to actually really enforce that 2% target.
Public sector banks were on a roll in today's trade. The PSU bank sector hit a fresh 12-year high in intraday trade, and it was Indian Overseas Bank which led the gains. Hemansh Kaval joins us with all the details.
Nifty PSU bank stood out, hitting a 12-year high through midday trade on Monday. This was the fourth consecutive session for the index in the positive, and all 12 but SBI hit their 52 weeks high today. The banking index was 4.34% intraday to 5,265 before closing 3.4% higher in trade. Notably, Indian Overseas Bank shares surged over 20%, hitting an 8-year high after approximately 23 lakh shares changed hands in multiple block deals earlier today. The bank overtook Punjab National Bank to be the third largest PSU in terms of market capitalization. This is interesting considering that the loan book for Indian Overseas Bank stands at 1.8 lakh crore, whereas the loan book for PNB is a little over 8.6 lakh crores. Indian Overseas Bank added most in terms of market value to the index as its capitalization surged over 13,000 crores and stands at 87,990 crores as of market close. UCO Bank and Punjab and Sindh Bank also witnessed gains of over 10% today, while other constituents noted gains ranging between 3 to 6%.
All right, now let's get you a BQ Prime exclusive. The Reserve Bank of India is working actively on building the first self-regulatory organization for the Indian fintech industry. According to sources, an announcement from the regulator is expected in the next few weeks. Vishwanath Nair shares the exclusive details.
Hello and welcome to BQ Prime. We're bringing you an exclusive story from the BQ Prime studios. What we're learning from our sources is that the Reserve Bank of India is currently working on overdrive to set up the first self-regulatory organization for the fintech industry. Remember that earlier this month during the Global Fintech Fest, the Reserve Bank of India Governor Shaktikanta Das had said that he expected the industry to come up with a SRO, and by next year, when the next iteration of the Global Fintech Fest happens, that SRO should be active. Now, this was something that the governor had said. And following that, now we are seeing a lot of action within the RBI as well as the fintech industry to set up this SRO. What our sources are telling us is that the Payments Council of India, PCI, which is one of the oldest industry bodies that exists within the fintech ecosystem, has been working closely with the Reserve Bank of India to set up its first SRO, and an announcement could be likely within the next few weeks. What we also understand through public statements is that FACE, which is another industry body consisting of a few more fintech members, had already applied for a SRO license in January last year and is still currently waiting for the Reserve Bank of India to give its approval. Another industry body, DLAI, which is the Digital Lenders Association of India, that is also in talks with the RBI to apply for an SRO license. So there is a lot of action happening within this space. The idea behind setting up an SRO is to take away some of the regulatory burden from the Reserve Bank of India because this SRO will be maintained by members within the fintech ecosystem. They can also address any issues that may come up during the system. It also helps as a viable forum to discuss any problems that the fintech industry may face in the future. This SRO, the proposed SRO, could have some kind of limited punitive powers, which can be used to address any offenders within the fintech ecosystem if somebody is not compliant with the rules set up by the SRO. Going ahead, we need to see how this comes up. Hopefully by the end of this year, we will have some clarity on which SROs will be active within the fintech ecosystem and how they're able to control any of the issues that may arise in the system.
All right, now Jupiter Lifeline Hospitals arrived in style on Dalal Street. The company had a bumper debut listing 32% higher than the IPO price. The shares listed at 973 rupees per share. BQ Prime spoke to the CEO, who shared his insights on the company's expansion plans.
Currently, our aspiration is to have, increase our strength in Western India. MMR is not a restricting factor, but Western India is currently the canvas which we are looking to operate in. And within this canvas, we hope to expand and operate. Yes, there is no shortcut. If you have to buy a land and build and do everything, it will take 2, 3, 4 years, depending on size and scale and all those things. But if you look at the life cycle of a company and also the life cycle of the hospital itself, we believe that that is a better investment in terms of time to make, because then, for the rest of your existence in life, the asset really performs much better. It is fundamentally sound. It is sustainable. You are able to design and build a good quality asset. You are able to choose the location that you like. If you get into acquisitions and asset light, you have to take what you get. And as I explained earlier, financially, the story does not play out very well. So yes, this is a conscious choice that we are making, that even if it means that we can't grow as fast as we could if we were to lease anything that came our way, we think this is a prudent way to grow.
All right, that's all from Let's Talk Business. We'll be back after a very short break with more news and updates.